Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Now, Elliott Waves is not only related by price but also by time, and that becomes important now for the yellow wave 4 versus the lower degree white wave 4 over here. Now, the difference between these Elliott Wave impulsive counts is that in yellow we have a 1, 2, then we're actually still looking for a higher 3, then a 4, and then a 5. And the white count you just saw is a sub-degree count of this wave 3, because this is then a 1, 2, 3, 4, 5 that you see over here. And in this case, you don't want the white wave 4 to be too long, as that then lowers probabilities. It is a white wave 4, increasing probabilities. It is a yellow wave 4, and after yellow 4 we expect one more push to the upside in 5 before a bigger corrective move to the downside. After a white wave 4 we would expect a 5 over here, then a yellow wave 4, and then a yellow wave 5. So it does matter, time at the moment does matter for the expectation of what is coming after. One more push to the upside and a corrective structure, or do we still get two pushes to the upside and then a potential corrective structure? Now, when we look at this yellow count over here, then you can see the wave 4 target area between the 236 and the 05 taken from the low of 2 to the current high that we have over here on my chart, right? So here we then have a target area between 43k and 40.8k, and time-wise, if price is going to continue ranging over here, the probabilities will slowly increase for a yellow wave 4, because this yellow wave 4 now, if we're still continue this range, is then longer than wave 2, because what you see over here are fib times taken from the high to the low here to the high on my chart here to compare wave 2 in time with this potential range. Currently, price over here has passed the 1-to-1 fib time, meaning that if we continue ranging, then this wave 4 is longer than wave 2, which is also what you like to see in a wave 4. And the longer this goes on, the more it increases probabilities. It is a yellow degree wave 4 for one more push to the upside in a wave 5. Because if we open the lower degree Elliott wave count, so in yellow we have 1, 2, 3, 4, 5, but in white we then have a lower degree 1, 2, 3, 4, 5. Here on the 2-hour chart we have the support area for the white wave 4 between 43.2k and 41.2k taken from the low of 2 to the high of this wave 3 over here. Most common target, of course, then 236.05, but the most common target area of this wave 4 is the 382 to the 05, commonly, usually. The invalidation is the 618 at 40.3k. But in this scenario, time is important. So we already passed the 1-to-1, meaning that this corrective structure is longer than wave 2 in time. Hitting the 3 fib time, no problem. Hitting the 4 fib time, it becomes quite long for a wave 4. Hitting the 5 fib time, that's something that doesn't happen often. That is rare for a wave 4 to be 5 times longer than wave 2. So the longer price is going to range over here, the higher the probabilities become, it is a yellow 4, and the lower the probabilities become, we are having a white wave 4. Of course, that still depends on the structure. Price can range to at least a 4 fib time here, which is Sunday night, right? But preferably before we hit the 5 fib time, which is Tuesday the 12th at 5 a.m. Central European time, we're out, right? We're gone. If we are still ranging over here, probabilities increase. We have one more push up for then a yellow wave 5. If we go to the lower time frame, I have a bullish and a continuation of the range / bearish count for you. Now, this is the bullish one here, where we were then looking for a WXY. I think it was a great idea posted by John in the group. W, zigzag, X, and then a Y in a triangle. And then you're going to be looking for an impulse to the upside, right? Where you have your wave 1, corrective 2, very, very shallow wave 2. It's actually rare for a wave 2 to be this shallow, because if you take a fib from the low to the high of 1, and I put on all of my fibs over here, then you can see the 236 has been hit. And the 236 is very, very rare for a wave 2 to hit. The most recent wave 2 that bounced on a 236 and had a move to the upside was in July or something. So very rare that this happens, and also because the weekend is coming, it even lowers probabilities that we're gonna get a wave 3, because the weekend usually is not really impulsive per se, like wave 3-ish. So Yeah, not common for a wave 2. Then we're looking for a wave 3, 4, 5. Now the problem for this wave 4 here, however, is if you take a fib from the end of wave 2 to the high of your wave 3, the wave 4 hit the golden pocket, which is an invalidation for a wave 4. You don't like to see this. Now, for the bulls, if you take a fib from the lowest point of wave 2, which is then this low here, and you drag it to the upside of 3, then you can see that the 0.5, usually a maximum target for a 4, is breached by a few candles, but you didn't yet hit the golden pocket. So that's the safe and grace, I suppose, but it's not nice. Even closing candles below the 0.5 is not ideal. And then if you pull it from here to here, hitting the golden pocket, that's not what we want to see, right? So it lowers the probabilities for an impulsive structure to the upside, and then a 1, 2, 3, 4, and another push to the upside in a wave 5. We can get another push up, but also in a corrective structure where we think about flat structures, but more about that in a second. So the probabilities then decrease for this particular scenario. Now, something that's also interesting is the 886, because on my chart I have this wick, and I do realize other charts have not, so we're going to look at the index chart in a second, right? But if I take on my chart a fib from the high to the low over here, then the 886 has been hit. Now, as we know on this channel, as we explain very, very often, after the 886 is hit, price loves to retrace somehow to the golden pocket, which it has done. Now, after hitting the golden pocket, we then have to observe the reaction. We do have some bullish CVDs here. We had some bearish ones here as well. More about that in a second. However, generally, after the 886 is hit, any move to the downside has a higher probability of being a wave C or a wave Y. It increases probabilities that price will take this high at least once more, and therefore also on my chart this high hopefully eventually, right? So the probabilities are high also in relation to the impulsive structure shown earlier, that we still have more upside to go. It's just that for a wave 4 this becomes quite deep, and because for a wave 4 it becomes quite deep, we have to think about other stuff as well. And that is why on the index chart I have the bearish count, because here we actually don't have the wick, so the Fibonacci's are better respected, right? So here we then have either an ABC or a WXY. Now in a wave W, we're then looking for a zigzag in an A, B, and then a wave C. Zigzag in W means that in a wave Y, you can only have a flat or a triangle. So a flat like this, or of course a triangle where you want to have an ABC, right? And that is then your wave 1 or your wave A, sorry. And then over here, you're going to create a triangle structure for wave Y. Now, the target area for Y is between the 0.618 and the 1.236, 43.7 to 42.7. If we're looking for a wave B, then this is your preferred target box here, taken from the high to the end of A in this case. Arguably, A can also be here, but it doesn't change the fibs too much. So your target area is between 44.8 and 45.1K. This is the most common target area for a wave B in an expanding flat. The 105 is quite rare for an expanding flat. And after wave B, you then expect a wave C to the downside, which is then an impulsive structure, which is going to give you a little bit of a lower target, right? Here around 42.5 to at the moment 42.1K. If we take the trend-based fibs and the fib here to this high at the moment. So quite interesting, and this would mean a continuation of the range that we're in at the moment. Now, talking about the range, when we look at this range here, then we are finding support on the support resistance area inside this range. You can see the two white boxes. So white box at the high over here, important support resistance area so far throughout this range, where we found resistance, right? And then we've been ranging around it, but then resistance again, resistance again, resistance again. And then at the lows, we have support. So of course, the moment price is going to dip inside this range again, potentially retest, increases probabilities to go to the other side. At the moment, we're on top, right? We do have the bullish CVD as well, and we're retesting this area. So you definitely want to stay above to go and move towards these highs. Self-explanatory, of course, really. And if we look at the lows over here, this is your support area which is between 43k and 43.2k. Now you just saw the volume profile, because I always like to keep an eye on the volume profile in ranging environments, where we're now bouncing on top of the value area high. Point of control is just below the white box, so that is at least a little bit of support, and we do have some more support as well, which is down here, the blue box, 43.2 to 43.3k. If we then look at the CVD divergences, as mentioned, we do have bullish CVD divergences, and in a trending environment, it's definitely something that we have to keep our eye on, right? So bullish CVD divergences, the target would be taking this high over here of these bullish CVD divergence, and it's invalidated if price would move towards the downside. Now if we go to the CVD chart, then here you can see the yellow CVD in particular, right? We have higher lows on price, but look at yellow, lower lows on the CVD, even all the way down here, right? Higher low in price and then lower low on the CVD, increasing the probabilities price wants to take this high, as there is absorption going on of market short positions with limit longs. Little bit of bearish CVD on yellow as well, lower high on price, higher high on the CVD. That is important to keep an eye on, because it is the same line. So if yellow shows bigger bullish CVD, that's nice, but if on the 3-minute or the 5-minute yellow continues to show bearish CVD divergences, these have priority over the bullish ones, right? So that is important to keep an eye on. And if we then look at the probabilities of the different scenarios, then on the low time frame, we are still looking for an impulsive continuation to the upside, where all of this ranging here is simply a wave 4, and we're still looking for a bigger wave 5 to the upside. More locally though, we have a bit higher probabilities to continue the range, because if we look at this bullish scenario, wave 4 hit the golden pocket, invalidating a wave 4. That's not what we like to see. Arguably, there's another bullish scenario in a wave 1, 2, 1, 2, and then you expect a very big 3 to the upside with high volume as well, but it is weekend, and seeing those type of structures in the weekend with a big wave 3 starting in the weekend is not something that we tend to see, so that lowers the probabilities of that particular scenario. Of course, we do have bullish CVD, and we have to continue to observe the CVD more locally. So if price takes this high, it's all about observing how price gets there. What is the volume? How big are the candles, right? How big is the impulsivity? Because there's always that bit of probability that we do continue. But at the moment, based on the info that we have, a continuation of the range has a higher probability. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.